So good economic news helped the market reach record highs today, but can we expect this market to continue its climb higher for the remainder of the year? Kevin Caron is portfolio manager at Washington Crossing Advisors, and he joins us now to talk about this. Good to see you, Kevin. Welcome back, as always.
Good to be here, and happy Thanksgiving.
You too. So you do expect this market can move higher, but a couple of things need to be put in place, and one of them is business sentiment.
Sure. There were three real pillars that we were looking for this year. Number one, we needed to see the central banks prime the pumps. They did that, the United States and China, cutting interest rates. Number two, we needed to see some improvement in the geopolitical climate. And maybe we're moving towards a deal with China, and maybe that some of the worry regarding Brexit has been pushed off. So that is an accomplishment, or a moving to an accomplishment. And then number three, what we really need to see now is a pickup in business confidence to show through as more business spending, because ultimately that can help generate more earnings growth next year. And that earnings growth has really been the piece of the puzzle that's been missing this year.
I said this to a money manager the other night on the program, and we were talking about, gee, how things look great and the market continues higher. That's when I start to get nervous, when we're all convincing ourselves why this market will continue to go higher. What do you think?
Yeah, so the data that you were just talking about a couple minutes ago, this improvement in the tone in the data for the last few weeks is really important, because we've seen a slowdown in global growth, we've seen a slowdown in global manufacturing, earnings year over year have been essentially flat. And what we've seen lately are just some initial signs that things might be firming up. And that would be enough to give the market some more confidence as we move into the end of the year. That's what we hope to see. But still, we're late in the cycle. We want to be careful. We want to own very good quality companies with good balance sheets, increasing and well-covered dividends, and ultimately buying things at the right price. And then you should be able to get through whatever 2020 brings your way.
Very quickly, start thinking about energy for long-term value.
Yeah, so energy is very deeply hurt in terms of their valuations. There's been a big drop in earnings. It really takes you need to be brave to step in and buy the energy complex at this point. But if you have a long-term perspective, that might be a good place to go. But mostly at this point, look for quality, consistency, durability, and good balance sheets.
On that note, happy Thanksgiving, Kevin. Thanks for joining us.
Same to you.
Kevin Caron with Washington Crossing Advisors.